Welcome to the deep dive. Today, we're looking at something pretty important for investors now, automated trading.
Mm.
Specifically, how do you actually use these powerful systems without, losing the final say on your own money?
Yeah, it's a big question. You've got this amazing tech, algorithm, speed, but then there's that need for control, for oversight. It's a real balancing act.
Right. Our mission today is sort of figuring out that balance, using some ideas from Faida Ventures LTD as a base.
Okay.
So let's start with, well, why these automated systems are so popular now. I mean, they're fast.
Oh, incredibly fast. We're talking algorithms, trading robots. They crunch data and execute trades almost
Oh,
instantly.
they don't sleep, right? 24/7 operation. That's got to be huge in, volatile markets.
Exactly. Think about reacting to breaking news overseas while you're asleep. A system can do that. Some even use things like sentiment analysis from news feeds to try and predict moves. That speed is a definite edge.
Okay, speed efficiency, 24/7. Sounds great. But then there's the control part, just handing everything over to a black box. That sounds a bit scary for most people, doesn't it?
It really can be, and that's why investor control is, well, it's non-negotiable for many. Automation is efficient, sure, but you need to set your own boundaries, your own risk levels.
Right.
You need the final say. It's like having autopilot on a plane. It's fantastic tech, but you still need the pilot ready to take over, right?
Yeah, good analogy, especially if there's unexpected turbulence.
Precisely. And that's where this idea of controlled trading access comes in. You use the automation, but within limits you define.
Which sounds like what Faida Ventures is aiming for with their hybrid model.
And that's the idea, yes.
Yeah.
They talk about managed accounts where automated systems handle the quantitative analysis and trading, often in markets like Forex, based on that data analysis.
But the investor keeps the oversight, keeps the authority.
Exactly. The system is like a powerful engine doing the heavy lifting on execution, but you, the investor, hold the steering wheel.
Okay, so you define the road, essentially.
You define the boundaries, yeah.
Yeah.
How fast it goes, maybe where it can and can't go, metaphorically speaking.
Let's talk risk management then, because it's not just about setting it up and walking away, is it?
No, absolutely not. The key is being able to adjust things.
Like the parameters.
Right. Setting and, crucially, adjusting parameters lets you adapt if the market changes or if your own risk appetite shifts.
So you can react to stuff. And you can actually, pull the plug or change the strategy if needed.
Yes, that ability to intervene, revoke access, modify the strategy that provides that personalized control, it's vital. It's about making the technology serve your goals, not the other way around.
Okay, that makes sense. Now, they also have this fee structure I wanted to ask about. The 30% growth high watermark.
Ah,
Fees only after hitting that profit level. What does high watermark actually mean in this context?
okay, so the high watermark is basically the peak value your investment reaches. They only charge that 30% performance fee on new profits above that previous peak.
Ah, I see. So if the value drops, you don't pay fees again until it recovers past the old high point.
Exactly. It means they only get paid when you make substantial new gains over your previous best.
And the benefit there is,
Well, it strongly aligns their interests with yours, doesn't it? They're incentivized to make the system perform well, to actually generate those profits for you. It encourages optimization, and it's pretty transparent profit sharing.
right. So putting it all together, the main takeaway seems to be you don't have to choose. You can have the tech, the automation, the speed,
Mm-hmm.
and also keep that essential control and oversight. It's a blend.
It's exactly that, a blend. Combining the power of algorithms with, human judgment and control, it empowers you, the investor, to actually use this technology confidently while managing your risk.
So wrapping up our deep dive here,
Uh,
we've seen automated systems offer these, amazing advantages: speed, data processing.
Definitely. But that investor control, having the final say, setting the rules, it's just as important.
And these hybrid approaches, like the one Faida Ventures describes, they aim to deliver that balance. Customizable settings, aligned fees.
It's all geared towards letting you navigate today's markets using tech, but on your terms, with informed decisions backing it up.
So a final thought for you listening. How might this idea of balancing automation and control fit into your investment thinking? What possibilities or maybe even new questions does this raise about technology's role in your own financial journey? Thanks for joining us for this deep dive.